Joining us now here at Post 9 is RBC Capital Markets head of U.S. equity strategy, Calvasina, and KPMG chief economist, Diane Swonk, also with us this morning. Great to have you both. And Diane, if we could set the scene maybe more broadly here, we did get this rate cut from the Swiss National Bank, Bank of England holding off but leaning that way. There's a broad, I guess, positive thesis that the economy is normalizing along the lines of inflation, perhaps growth rates, and central bank policy. Can it be that good? Are we going to pull it off?
I certainly hope so, although I think we're in this sort of watchful waiting period where it's not whether or not central banks cut this year. The Bank of England much more dovish than even expected on their statement, leaning in that direction for August, hopefully. But the Federal Reserve also sort of wanting to make sure that they hit the landing and don't overshoot, although I do think the risk is still high that they do overshoot given some of the softening in economic data. And that's important. You know, we've seen the Fed sort of push out their patience here to the extreme, and I think it's going to take an awful lot of good data for them to actually ease by September. We'll get more from the Fed today in terms of talk. I think it's all going to be very non-committal and patience, although Mary Daly, watch her comments for her concerns about nonlinearity. That's the word they always use in terms of when things go south, they tend to go south rapidly. And many people forget that the soft landing that was 1994-95 cycle, there actually was 2 negative red ink reports on employment that were later revised away that prompted the Fed to actually cut during that cycle. So it wasn't as clear cut of a soft landing as it was made out to be.
Oh, yeah, it's always much more obvious in retrospect. They definitely got towards stall speed in 95. At least we thought so. Lori, when it comes to how the market is digesting all of this stuff, it doesn't seem like it's very disturbed by the macro at the moment in terms of last 21 days, Lori. The volatility of the market's been incredibly low, obviously driven by this growth trade, but also supported by the earnings outlook.
I think that's fair if you're looking at it from an S&P 500 lens. And, you know, we're in this weird part of the market where these kind of things that are making us nervous, whether it's the squishy consumer, people getting a little optimistic about the Fed timeline, and it's pushing people into these more defensive parts of the market, which happen to be the big weights in the S&P 500, and we're making these new highs. If you want to get scared, take my old job and look at the Russell 2000. And what we were watching last Wednesday, while Powell was speaking in particular, was Russell relative to S&P. And you basically had this big pop on the CPI data. You gave almost all of it back by the afternoon, and small caps by the end of the week had made major new lows relative to the S&P. And so we see that nervousness being expressed in that discrete trade. However, it's not really being extrapolated to the broader market yet because of those defensive undertones.
So do you essentially kind of defer to the market's conclusion that we have a little bit of a risk below the surface, or do you say that's an opportunity for smaller stocks?
You know, I do think their opportunity is there down the road. I do worry when I do hear some people, not a ton, but I hear some people trying to make these bullish arguments on small cap because the cuts are coming, and I just feel like we need to wait and see. It's almost like listening to children who aren't listening to their parents, and they're just, you know, determined to hear what they want to hear from the Fed. And I think there's going to be some disappointment on that timeline. Our camp at RBC is looking for a December cut, not a September cut. So when I still hear these September discussions, I feel like for this particular year, we may be still sitting up for a little bit of disappointment.
You're at 5,300, Lori?
Yeah, we are. And look, we're a little bit above our target right now in terms of where the market is. And I think when that happens, you know, I loved the discussion we heard earlier about, you know, sort of price targets and markets move. I think the worst thing you can do is when, you know, the market kind of moves above your target is rush to judgment. I think you need to sort of listen to what the market's telling you. One thing we had said was to get a number really above 5,300, we thought markets needed to start baking in a positive view of 2025, and there were still a lot of clouds on that horizon. Now, I think what has ended up happening has been this undercurrent of nervousness. I think we've just frankly seen better earnings results from some of these bigger companies. And then you have all the international stuff, right, which is spooking people on Europe again and driving people back into the U.S. as a safe haven. Is that really going to be enough to sustain us? I think ultimately you still have to have that 2025 view come in and really kind of bolster some of this optimism.